So welcome to this class. In this video, I'm going to show you some basic things about stock investment. I am the profitable man. What is a stock? A simple definition of a stock is a type of security that says you own part of the corporation or a company that issue it. Stock are also known as shares or equity. So if you buy a stock, that means you are part of the company. Another one is that a person that owns a stock is a shareholder or stockholder. A stock can be called shares or equities also. So, a shareholder or a stockholder is entitled to a proportion of the corporation assets and earning. So, stock are bought and sold predominantly on stock exchange. So, you buying a stock is like owning the part of the company. No matter how little the stock you buy or you bought, that means you are part of the company. Do you understand? Why should I buy stocks? People buy stocks for two major reasons. First, they expect the shares price to go up. This is known as capital appreciation, meaning that if they buy Apple shares at $209 and in 6 months, if the shares price goes up to $250, that means they have made a profit of $41. This is called capital appreciation, whereby the price you bought the particular shares has increased in time. That means your capital has appreciated. So, another reason to buy stock is people buy shares because they expect to get some income from the company periodically. This is known as dividend. Companies pay dividends from the profits they make within a period or when they sell an asset. A dividend is like the company is paying you part of their profit they are making. Some company pay annually and some company pay quarterly. So this does not affect your capital. For example, MTN Nigeria pay 10 naira dividend per shares. That means if you have 5 shares, 5 units of shares with MTN and they paid 10 naira dividend, that means you are going to get 10 naira multiplied by 5 and that money is going to enter your portfolio apart from your capital. It's not all companies that pay dividend. Some companies don't pay dividend, while some companies pay dividend. So before you buy a stock, you should find out maybe the particular company is paying dividend or they are not paying dividend. What determines the return on shares? Returns earned on shares are determined by two factors: dividend payout and capital appreciation. Dividend payout is how much a company pays as dividends, while capital appreciation is the increase in a company's share price. How much should I invest in stock? There is no hard and fast rule here. A common recommendation is to invest 20% of your income in savings and investment. However, it is up to you how much of that you want to put in the stock market. A common rules of thumb to calculate how much you should invest in stock is the 100 rule. 100 rule. If you subtract your age from 100, it equals the percentage of your portfolio that should be allocated to stock versus cash or fixed income securities like bond, ETF, and mutual fund. Your investing strategy should take into account of your age, your current financial situation, your financial goal, your timeline, and your risk tolerance or risk appetite. The younger you are, the longer you expect to be investing, the more you can focus on your portfolio on long term gains, and the less you have to worry about short term risk. Keep in mind, you should only invest what you are willing to lose. So, if you are not willing to lose any money, do not invest it. If you are not willing to lose, do not invest it. In investment, we don't only gain, we lose money sometimes. That is why you have to have it at the back of your mind that as long as you can make money, you can also make some loss. So, what is a stock exchange? A stock exchange is where stocks are bought and sold. The United States has two major stock exchanges, the New York Stock Exchange and the National Association of Securities Dealer Automated Quotation Systems, NASDAQ. This stock exchange opens at 2:30 p.m. Nigeria time and closes at 9 p.m. Nigeria times from Monday to Friday. So, when we're talking about the Nigeria Stock Exchange, which is called NGS, NGS opens by 10 a.m. and closes by 2:30 p.m. from Monday to Friday, unless there is an holiday or a special day. So, if you want to know where to buy stocks in Nigeria, you should contact NGS and they will actually show you many brokerage or verified brokerage under their exchange. So, what are stock price? The stock price is the highest amount someone is willing to pay for the stock or the lowest amount that it can be bought for. That is a simple definition of stock price. What stock should I buy? Well, I cannot say exactly, but first rule in deciding is to make sure you understand the company business very well. Are you familiar with some of the products they sell or the services they offer? Do you know how they make money? Once you understand the business, you might think that the stock is currently undervalued. For example, the stock price is too low or will increase in the future. If you feel this way about a stock, you should probably buy it. Another way to know how to buy a stock, because there is some three things I used to say to people. Three important questions you must know before buying any stock. Number one question is, what does the company do? Number two, how do the company make money? Number three, who are their biggest competitors? For example, Apple company, what does the company do? They make laptop, iPad, phones, gadgets, and render services. How do they make money? By selling all these things, by selling their products and making money from their services. Who are their biggest competitors? Maybe Samsung, Android phones. And then, are these competitors have the potential of beating them in the next 20 years? I don't think so because of the quality of their product. So, this is the very short basic lesson on stock market. Don't forget to like and subscribe to this YouTube channel. And if you have any questions, you can ask on the comment section. Thank you. I am the Profitable Man.